At its final Monetary Policy Committee meeting for 2023, Bank Negara decided to maintain the overnight policy rate at 3%. This marks the third consecutive session where the MPC has opted to press pause on the OPR despite calls from some quarters for the central bank to raise the key interest rate to help stabilize the ringgit, which is at a near 25-year low against the US dollar. The last hike happened back in May when BNM increased the OPR by 25 basis points to 3%. Commenting on the latest monetary decision, BNM said the advanced gross domestic product estimate points to an improvement in economic activity in the third quarter. The central bank says that growth in 2024 will be driven mainly by resilient domestic expenditure, with some support emanating from the expected recovery in electrical and electronic exports, while the growth outlook remains subject to downside risks stemming from the weaker than expected external demand and larger and protracted declines in commodity production. Upside risks to growth mainly emanate from stronger than expected tourism activity, a stronger recovery from the E&E down cycle, and faster implementation of existing and new projects. At the current OPR level, BNM notes that the monetary policy stance remains supportive of the economy and is consistent with the current assessment of inflation and growth prospects. Going into 2024, BNM said inflation is expected to remain modest as both headline and core inflation had moderated due to easing cost pressures. In the third quarter, headline inflation averaged at 2%, followed by core inflation at 2.5%. On the global front, despite some signs of recovery emerging in the E&A sector, BNM warns that global trade remains soft, partly due to the shift in spending from goods and services and ongoing trade restrictions. Commenting on the currency market, BNM said expectations of a higher for longer interest rate environment in the US and increased concerns over the escalation of geopolitical tensions had contributed to a persistently strong US dollar. Nevertheless, the central bank assured that these developments are not expected to derail Malaysia's growth prospects, and it will continue to manage risks of heightened volatility, including to provide liquidity to ensure the orderly functioning of the domestic foreign exchange market. Malaysian Aviation Group, parent company of Malaysia Airlines, is on track to achieve its first full-year net profit since its privatisation back in 2014. According to Group MD Datuk Isham Ismail, this is driven by strong demand in the marketplace, elevated yields and a lean and agile balance sheet. This turnaround comes 2 years after it completed a restructuring exercise in February 2021 that saw it achieve a reduction in its liabilities of over 15 billion ringgit. Speaking at the two-day Kappa Asia Aviation Summit 2023, Isham says that the group has been cash flow positive on a daily basis for the last 27 months, with net gearing at 1.09 times and its cash balance at 5.2 billion as at end October 2023. Isham says it forecasts that demand will remain elevated at least until the second quarter of 2024, with capacity in the Asia-Pacific region to return to 2019 levels by the end of this year. For MAG, he says the airline will attain 93% seat capacity of 2019 levels by the close of 2023. According to Isham, fuel as well as foreign exchange and interest rates are major concerns, especially when MAG takes delivery of new aircraft, especially if they are on operating leases. MAG is betting on most part on Asia, India, Australia and Europe to drive its growth going forward and plans to launch routes to Amritsar, Ahmedabad and Trivandrum next week. He does note how passenger traffic coming out of China has been disappointing given its increasing unemployment rates, but still expects recovery in the Chinese market at the end of the second quarter of 2024. On Malaysia Airlines in-flight catering services, Isham says 97% of its meals have returned to normalcy, adding that it is still on track to fully restore its in-flight meal services by November 15th this year. Mitsui Co is investing $58 million in Axiata Digital and Analytics through ADA's holding company, Axiata Digital Services, which is a wholly owned unit of Axiata Group. Mitsui's additional investment values ADA, Asia's largest independent data and AI company, at $550 million and increases its stake in ADS from 3.29% to 20%, resulting in an effective 12.69% stake in ADA. Notably, the Japanese Chinese conglomerate has been working closely with ADS and ADA following its initial investment in 2019 and is now intensifying efforts to deliver data and AI solutions to partners and clients in the Asia-Pacific region. Group CEO and MD of Axiata, Vivek Sood, said that Mitsui's substantial business capabilities derived from a global portfolio will further enhance ADA's expertise in AI and data analytics. Toru Matsui, Representative Director and Senior Executive MD at Mitsui, said the additional investment in ADS will strengthen its customer relationship management strategy to develop digital marketing business clusters that contribute to its consumer-centric businesses. ADA CEO Srinivas Gattamneni says that the group is excited about the prospect of deepening its collaboration with Mitsui to empower their partners with cutting-edge data, AI and technology solutions, and says this represents a significant step forward as it enters its next phase of growth. Stella Holdings received shareholders' approval to buy construction firm Pembinaan Teguh Maju in an extraordinary general meeting on Thursday. In a statement, Stella said the acquisition, which comes with a profit guarantee of $120 million for FY24, FY25 and FY26 on an aggregate basis, is especially noteworthy due to PTM's $1.16 billion worth of outstanding orders in areas such as roadworks, building construction and mechanical and electrical projects. Moreover, PTM has submitted quotations and is in discussions for contracts totaling approximately $1.78 billion, amplifying the earnings potential over the next 3 years. After the EGM, Stella Managing Director Datuk Benson Lau said that the group's unanimous decision to acquire PTM marks a pivotal moment for the company as the new addition brings a vast $1.16 billion worth of outstanding orders into its portfolio, thereby solidifying its growth prospects. Complementing this acquisition, Stella will undergo a rebranding to become Varia, a change that encapsulates with wider vision and growth objectives. The EGM also gave the green light for a private placement of up to 50 million shares, representing around 74.63% of the current total number of issued Stella shares, or 11.99% post-acquisition. The exercise aims to raise 40 million for necessities like construction materials, labour costs and subcontractors. BCorp has emerged as a substantial shareholder of Salcon after acquiring 55 million shares, or 5.43%. This makes the Tan Sri Vincent Tan Ling conglomerate the third largest shareholder of the waste and wastewater engineering firm. BCorp did not reveal the purchase price of the stake acquisition. However, based on Salcon's latest closing price of 21.5 sen, the stake would have cost 11.83 million ringgit. Salcon's share price jumped 14% today to close at a near 3-month high, giving it a market capitalization of 218 million ringgit. Salcon's largest shareholder is its Executive Deputy Chairman Tan Sri T. Tiam Lee, with a direct interest of 5.785% and an indirect interest of 6.761%, followed by T's spouse Datin Goh Fek Lin with 10.58% stake in the company. Goh is also Salcon's non-independent and non-executive director. Salcon's financial performance has been languishing, with the group registering a net loss of 41.33 million for FY 2022. Prior to that, the group had been in the red for 3 consecutive years, with a net loss of 4.39 million in FY 2018, 9 million in FY 2019, and 8.06 million in FY 2020, before returning to the black in FY 2021, posting a net profit of 16.78 million ringgit.